Hi guys, it's Miliano FX, and today is another new week, and we're going to be analyzing gold. So I will be going into the gold chart right now. So since we are starting a new week, we're going to be starting from um the weekly time frame because it's a new week. So I like to take my analysis from the weekly time frame once the week once we start a new week. I like taking my analysis from the weekly time frame. So I analyze from the weekly time frame down to my time frame of structure, which is the 4 hour where I get my A plus setup or my B plus setup. So let's go to the weekly time frame first. So let's go to the weekly time frame. So we are on the weekly time frame, and we can see that price has been pushing high for a long period of time. So I'm going to keep this short. So we have this right here. We have this breakout structure right here. We have that breakout structure, and price gave us this swing low. Price gave us this swing low right here. We have a swing low, and we have a swing high. So I'm going to be quick so you can see how I analyze my trades. So I'm going to tag this as a swing high, a swing high. So now we see that price currently has been pushing up, and price currently was pushing down rather, but for a long run, price has been pushing up in a long run. So price has been pushing up in a long run, but currently it has been pushing down. So this is a weekly time frame. So let's take that off. Let's take that off. So now let's go to the daily time frame. Okay, before we go to the daily time frame, let's see this. Let's mark out this point, this level which was taken out. So mark out this level which was taken out. So, and this level gave us a visible swing. So this one gave us a visible swing right here. So we have this point as another swing low, another swing high, rather I mean, swing high. Sorry, I'm gonna take this out. I was looking for this. We have this swing high here. So we have that swing high. Then we have this swing here. We have this point as our new swing low, swing low. So now we're going to see, knowing that price is bearish, we're going to go to the daily time frame to see what is happening right there. So looking at the bearish move that we're pushing down since. So on the daily time frame, we have structures pushing down. So I'm going to take out this line. I'm going to take out that line. I'm going to take out that line. I'm going to take out that line. Okay. So it has loaded up. So I'm going to take out that line. So we have a clear view. Then we have this right here on the daily time frame. We have this structure. Right? We have the structure. We have the swing. We have the swing right here. Swing high. So then we have a swing low already. So now knowing that we have a swing high and a swing low and a break of structure, I'm going to replace that back here. I'm going to replace that here. Knowing that we have this, then we'll go to the 4 hour to see what price is actually doing because price action was kind of messed up around here. So we're going to go to the we're going to go to the 4 hour time frame to see. But I want to map out this skeleton, or should I call it the way price moved here. I'm going to map it out. So I want to see. So we have this swing low here. Then we have this point looking like a swing high. But we're just going to, this is where price stopped currently. So I want to go to the 4 hour and see something clearly. So we have our swing high. Then we have we have markets currently pushing, kind of looking like it's pushing upward. But let's see, let's take out that and map out the structures and let's be sure what market was doing there. So we see that price came down to this point right here, the swing low. There was multiple rejections and price broke internal structure here. Price broke internal structure. So price broke internal structure, and we have a swing low, which was previously a swing low that we had previously. Then gave us a swing high, a swing high. So I'm going to mark that. So that's a swing high, swing high. I'm going to extend that here. We have a swing high here. Then price came down from the swing high, created the swing high, started pushing down on the 4 hour, pushing down the 4 hour, reacted to some form of order block right here and pushed up to this point right here. So let's see, let's map out that order block there. Okay, then before I map that out, let me do something first. Let me take out this. Okay. So now let's map it out. Let's see the reaction. So let's see what price actually reacted to. You can see price actually reacted to this order block, tapped into it. You can see clearly it did tap into it. It indeed tapped into it. So if I take this out, you can see that it's actually tapped into it. You can see that. So what do we have? We have a clear inducement here. So this is more like an A plus setup. Price did exactly what it should. So I'm going to put that as an inducement. So I'm going to put that as an inducement. Normally, I would have put the inducement here. I would have preferred it being here. Let's see. Okay, I think it should be here. I want it to be like this. I want it to look like this. So because there's a break of structure here, making this low. So price took out. Okay, price took out this and gave us this one. Okay, so this was the inducement. This was the inducement. So I'm going to label that the inducement. So we have an A plus setup here. Now should I say that's an A plus setup or a B plus setup? So we have this here, an FVG. So for the confluence intact A plus setup equals structure. This is internal market shift. So I'm going to tag that MSS internal market shift. So the trend was on the daily time frame bearish, but so this will be a B plus setup. B plus setup. So this is a B plus setup. So this is a B plus setup here, and price triggered it. Price triggered it and decided to sweep here before pushing up again. So when price did that, it gave a major change of character here, giving us a swing low here, giving us a swing low here, and a swing low here. I'm going to put that MSS swing low. We have our swing high. I'm going to click that very well. So we have our swing high here. So that is going to be my target or the drawn liquidity. So you can see that when we put our tools together, where is it? So we are going to be using the fib retracement tool. I think network is kind of holding this back. So okay, so we're going to be adding our Fibonacci retracement tool and see if price. So in the Fibonacci retracement tool, so on the discount zone, we have this. So this demand zone here, and we can see that in this discount zone. Sorry, I'm going to set that properly. In this discount zone, we're going to mark out the confluences. So let's take out this Fibonacci. So we have the targets and the discount zone. Let's take out that Fibonacci. We are going to apply an FVG here. See an FVG. We have FVG. And we have this. So this was broken. This point was broken. Right? So this point was broken. Broke that structure there. So we're going to name what's below it an inducement. Oh, sorry, I'm going to name that an inducement. So we have our inducement. So we have an A plus setup. Oh, sorry, a B plus, another B plus setup right here. We have another B plus setup here. So B plus setup, we can see the price tapped into the B plus setup and pushed up. So how should we have entered this trade? So my entry will be on the 1 hour time frame. So you can see the price has already tapped. Price has already tapped this point. Just need to wait. Let network. Let me get this on. Okay, so we have this point, reaction point. So we're going to go to the 1 hour time frame and see the reaction there. So we have a B plus setup. So what did price do? So let's read what price did there and how we could have entered. So price tapped, reversed back. There's a structure here, which was the last break of structure here. So what did price do? Price broke that structure. And when price broke that structure, it gave us a market structure shift. It gave us a clear market structure shift. So on this market structure shift, I'm going to take out this. So we are meant to have this. We're meant to have this as the pullback. So normally you would have entered this trade from here, from the demand zone. I think this is the demand zone. The discount area, this is where we would have entered the trade. So we're going to adjust this. Oh, we're going to adjust that. We're going to adjust this here. So this is how we would have entered this trade. Take out this. So what we have the FVG, which is here. Then we have the inducement, which is here. Then we're supposed to enter from this order block to look like something like this to push price higher. Had it been price came back to tap into the order block, but it did not. It did not come back to tap in. So this is gold. This is how gold normally moves. Sometimes it doesn't come back for you. Just keep moving. It just keeps moving. So this is how I would have entered the trade. Long positions. So this is how we have entered the trade. Stop loss here above this low, just a little bit above the low. Then target 1:3, or 1:3. Yeah, so 1:3, and that would have been it. But you can see that price didn't come back. Had it been price came back, it would have been a different story. But price did not come back. Rather, it just pushed up and continued the bullish move. So That is it, guys. See you in my next video. So make sure to like and subscribe and also turn on the notification bell. This will be my second video on YouTube. I will appreciate it very much if you leave a like, a subscription, and also turn on the notification bell. Thank you. See you in my next video, guys. Bye.